Yeah, so sound is still weird. Sound is still weird. I was just trying to find the shipping. Um, Trying to see shipping on this microphone. This new one. It's like, just give me the thing. Order number. Just give it to me. Yeah. Yep. Yep. Yeah. Oh, I don't know. Man, come on, just ship the thing. It's like, you'll get an update soon. It's like, it's been like 6 days, 5 days. Don't have my shipping thing. So yeah, it's 70s radio. Yeah, kinda. Yeah, it sounds like I'm like broadcasting from inside of like a metal box, right? Yeah. Yeah, it's kind of annoying. It's like, good old Logitech. I love it. Your order number is below. You'll get tracking information soon. It's like, no, ship it. It's like, come on. It's like, I don't. Yes, I have an account, but yeah. Oh, guest code. There we go. I was like, what is this? What is this? I know, right? Yeah, it's kind of crazy. It's yeah. You know what it is. It's just it's one of those things. Oh, I do have a guest code. It's like use this or the guest code. It's like what? What do you mean guest code? Like I just want to know where the heck it is, man. Just want to know where the heck it is. Search. Um, it says order in process. It's like come on. I think this. It's funny. I think it said it's like do this and it's 4 to 7 business days it'll be at your house, right? I'm like all right. Normally that's not the thing, but it's been like 3 business days or something like that, and there's not even a shipping label yet. So it's kind of annoying. It's like what do you mean in process? Ship the thing already. Come on. I stopped caring. Yeah, I know. Exactly. All right. So right now, looking at the markets, not. I would say obviously the pound is the biggest mover, right? We'd seen some kind of retracing a little bit yesterday, but again, we're seeing a continued fall today. You're seeing the pound dollar down 70, euro dollar down 100. Again, it's kind of the dollar retracing back again. I'd love to say that it is, but dollar yen minus 15, dollar Swiss 4, dollar CAD 2, Aussie minus 7. And then again, you're seeing the pound kind of weakness right here. It is retracing a little bit, but I'm sorry, you're seeing pound strength coming here. So it's weird. You're like, I see pound strength here, but I see pound weakness over here, little yen strength. And then again, you're seeing some pound weakness here. It's like, wait, what? Right? But then you're seeing dollar weakness, dollar weakness. So, they're kind of all over the place. The consumer confidence number today, I think, is going to be a big one for the overall markets. It's kind of funny. The world economic outlook, gloomy and more uncertain, right? Right? Gloomy and more uncertain. Although this was an interesting one, too. The Feds could surprise market by sounding even more aggressive as the economy teeters. Um, yeah, right? Um, I mean, I would say, yeah, I have to agree, right? Kind of makes sense, right? I mean, we know that, yeah, inflation is continuing to move. Nothing they've done thus far has done anything. So, um, yeah, so it's there. Um, Seems like it's the case everywhere. Everybody's raising, right? But we're not really seeing inflation really start to turn anywhere. But we are seeing a lot of countries go into a recession. So, you know, kind of know where this is going. And again, I love this one. Hey, guess what? There's quote some problems, right? The turbine is en route from Canada, right? It says there's some problems with another Nord Stream turbine. So I don't know. The whole pipeline thing is kind of interesting. It's coming from Canada, guys. It's getting serviced, right? Um, Besides that, a little sell-offs with the dollar. Sterling edges higher. I love this. Sterling edges higher as economic outlook darkens. Like, really? The sterling is going higher? Really? Here? Here? Maybe it went higher versus the euro, but weaker versus the dollar, weaker versus the yen. So I love when they put these articles out. It's like, what? Um, this is a cool little article, too, right? A global recession can be avoided, but risks are high. Okay? Um, yeah. I love it. It's inevitable. It's not inevitable, right? pretty sure it kind of is. And then again, there was supply chain disruptions, and then obviously, Russia. There was an article today that, it's funny. It was like, I don't want to say it was clickbait, but at the same time, I clicked on it, so maybe it was clickbait. It talked about how China is buying less Russian oil. And yes, the reason why China was buying less Russian oil was because Russia was starting to charge too much for it because other countries were outbidding China on it. So yes, they were purchasing less, but only because other countries were willing to pay more for it. In kind of like the rush to everybody wants cheap oil from Russia, right? So it's kind of misleading. You're like, oh, look at that. China's doing the right thing. They're not buying Russian oil. But it wasn't because they didn't want it. It was just because other nations outbid them. And they said that they would, bid a little bit higher next time. But yeah, India was like, we'll take it all, baby. We'll take it all. So kind of funny. And again, that's kind of what I said was going to happen. Everyone's going to be like, no, Russian oil's dirty. And then many countries would be like, wait, it's how much cheaper? I got no qualms using it, right? So sometimes these pundits would go on a year-long vacation. They're just running their mouths. They feel up that air. Yeah, basically earnest. But it's kind of funny, like, and again, I can say this now, and I used to tell Todd all the time. I'm like, Todd, it's kind of like whenever I see an article written at 5 or published at 5 o'clock in the morning, right, on Daily FX from like an IG guy, I always do the opposite, right? And it was inevitable. It's like, dollar strength today is crushing the markets. And then you look at it, you're like, did he mean strength or weakness? Which one was there a typo there? Was it like an auto spell? So yeah, it's kind of funny. I mean, the article thing is not as easy as it sounds. Obviously, I did the articles for Natix and stuff like that, and it was amazing how many of them worked out. Like I said, I'm not tooting my own horn, because they are hard because you are doing it ahead of time. It's got to get approved. So it's like you're doing it like a day or 2 days in advance. And it was funny, like back in the day, Chip was always like, man, he's like, you hit these things like so much. I was like, yeah. I was like, obviously I can be wrong. I was like, but I'm trying to, again, provide fair balance, provide two sides of the same trade. But it was just, always fun, doing the article thing. It's definitely different. And again, I used to have to go through compliance. So I used to like write it and then it would take 2 days before it would get published. These guys are doing it like morning of. So I'm kind of like, I don't know. Some of them are funny, Like I said, the daily effects guys were always great. Massive dollar strength today, and you're like, what is he looking at? What chart? Is he sure he's not looking at something else? Is he looking at inversion? So it's always kind of funny. Anyway, 10 a.m. tomorrow, this morning. I think consumer confidence will be a nice one. It's already expected to be lower. Manufacturing is also supposed to get kind of blasted on this one. We'll see. Maybe it'll be a surprise. Maybe it'll come in like 98. Won't be as low, and people will be like, yeah, look at that. It's not as bad as we thought. Or it could come in as kind of what the rest of the world is looking and come in as like a 95 or 93 or 94. And again, it doesn't bode well for the market that everybody expects a recession. It's kind of one of those things. People are like, yeah, we don't need to go into a recession. But when everybody feels like we are, it's a self-fulfilling prophecy. And that's kind of how the markets work, right? Again, right now we still have the spending. Everybody's seen it, but then again, if you kind of look at what everybody expects and what manufacturers are looking at, and we're starting to see the housing thing because that affects people. Now is where you're starting to see the you're like, it's going to get worse. We're going into a recession. So yeah, nobody ever I would say the negative side is much more powerful than the positives. It's like kind of like the Force, right, in Star Wars, about how the dark side is so much more powerful, right? Are they more powerful, or do people just really like that side better? It's kind of like everybody wants to be the bad guy, right? Kids growing up, you want to be the good guy, but now in this culture, it's better to be the bad guy than the good guy, right? So we don't make new heroes. We make all of our new superheroes are like bad, but all of our new like anti-heroes, those guys are good, right? Is kind of what it is. So yeah, so I think this consumer confidence number is really going to set the market off today. We'll see how it kind of goes at 10 o'clock. We'll come back to it. And then tonight, obviously CPI quarterly basis. I mentioned it yesterday. I think it's very important. Aussie is already starting to do kind of some big raises. And again, on a quarterly basis, we're kind of see it continue. And again, their trend is actually increasing as well, which is, again, not what you want to see when you start raising interest rates. But again, quarterly basis, so it is a little bit different. But that'll be important. And then obviously tomorrow morning, we start getting the durable good orders. Now, durable goods used to be a higher kind of ranking, but right now they can only have so many highs, right? Everything can't be high because it kind of defeats the purpose. It has kind of dropped back down again. I actually think tomorrow morning, the pending home sales is actually probably more important than the durable goods, right? And the core durable goods. Because people need goods and services, but pending home sales, I mean, they're expected to be negative. People are already talking about how, the markets have flipped. Like, the housing market has already started to flip. That's true. It has started to flip, but now we're going to start seeing it again on a monthly basis when the home sales are starting to go down. This number starts to get a little bit crazy, right? Is the dark side stronger? No. I know, right? Exactly. That said, my monovalence. I know. She's ready to burn you in sleep. Um, yeah, so I think home sales is actually should be marked as a red. I think again that is kind of a leading indicator right now. So if you guys are not watching that one, I feel like that's what the talking heads are going to talk about because mortgages are a big thing. The housing market was responsible for one of the last kind of pops that we had in the market. With that said, okay, interest rates directly affect mortgages. We're already seeing mortgage rates, our mortgages at like a 22-year low and things like that. It's only going to get worse as we continue to raise interest rates. So, yeah, and that obviously affects bank profits kind of. And then, obviously, tomorrow we have the Fed funds rate. So today may be a little bit slower overall as we start to prepare for this one. Right now, the consensus is that we're going in at that 50. I'm sorry, the 0.75. I think that's universally accepted. I don't actually think there's going to be any surprises tomorrow with it. But remember, I mean, the housing market tries to go up and do its thing, but the higher this gets, it's kind of getting back to cool levels. Now, I will say, with the U.S. back up at 2.5. Kind of starts making the carry trade a little bit more interesting, but it's going to bring dollar strength back in just naturally because there is definitely much more of a rate than you can get over something like Japan. So, there will be some movement, but how much is really baked in? So, today, like I said, I think it'll be a little bit slower. I think tonight is really in the next 24 hours. I think the Aussie is going to be the best trade tonight. And again, we'll kind of, jump in there and see what that looks like. Let's start off with the Aussie dollar. So, yesterday we were talking about kind of this lower level, and we were sitting right here yesterday. We talked about a level. It kind of made a decent move. It dropped about 20 pips, and then again hit that 10:30 reversal window. And we're always scared when it's not quite a profit at 10:30. And then it came back up and touched the level again and went down, and then touched it again. And you guys know 4 is the no-no, right? So we hit it. Went down, didn't quite make it. Came back up, hit it again. Hit it again. It's like, oh, there's 3. Next one's breaking. Actually, it survived one more hit down. So had you gotten short that position yesterday, you had more than ample opportunities to get out. But what it did do is it went back up and it grabbed the higher level, the original one we had marked off. And if you didn't like that level, you could have reestablished it right here as well. And that one is actually out. It came back in late last night, and then right around, again, you got to love these, right? Right there is the 3 o'clock candle. There's the opening print, right? Again, it's always great how this works out. As I said yesterday, I spent about an hour and a half yesterday. I definitely have a lot more. I don't know if I'm going to be able to get it. The boys come back today, so I don't know. We'll see how much I can get done. The goal is if I could get it almost done, I could start recording like half of it. But obviously the microphone problem is going to be a problem because I'm definitely not recording a video sounding like I'm inside of a tin box. But anyway, we were talking about this being pushed back down from these levels. We do have an alert up top, but right now this level is still holding, and you can see the 1 to 3 actually kick through. This is about a 40-something pip runner, so was decent. But again, European session open, continue to push back down again. Actually, I didn't even check this. Let me draw it on here because I know you guys love looking at those fibs. Actually, I mean, here's the zone that it grabbed right there. So again, that should have been your profit target regardless. But yeah, so informing the trade again, there's your 628. So I would say right now, again, we're seeing some dollar kind of, again, depending who you talk to, but we're seeing dollar strength push down again. I'm actually good with this dollar strength coming in early. What I think that does is it provides an opportunity for us to find some type of a long opportunity for tonight with the CPI data. And again, all that does is it kind of repositions it for tomorrow morning. So this one is kind of like a, how do I say this here? It's kind of like a ping pong trade kind of getting set up. If you wanted to refine this upper level, you could, but just be cautious. We've definitely hit it a few times. We have pushed deep in there. I think topside with any like major spikes, Again, 69.92 is kind of what we're looking for. As I said, the 69.70 now, I mean, there's 1, 2, and 3 hits right here, plus some front running. So I'd be really, really cautious with that. If anything, I mean, if you're really like dying to get into that one, maybe put something in there. Um, it's about 10 pips. So I don't know if we can rally up today for news ahead of time. There could be something in there, but it's quite a bit of it's only 37 pips, so kind of compressed. So again, that one is that's what it looks like. It is pushing off, and it does actually. If you're looking for that 61.8, and again, pretty easy level. There's the level there. Again, we were already short, but I don't think it's out yet. And again, you could have done the entry here. You could have taken your profit here, and then on the test, got it on the other side. I don't think it's out though. It is actually just right there. There's 3 on the button, and it literally just hit. So yes, if you would have taken that off the 61.8, you could have also taken that one as well. All right, and either hit, that hit would have worked, or that hit would have worked. Didn't matter. Both of them are 1 to 3. It looks like it's about a 7.5 pip for about 25 in the other direction. So, not quite the 30. Not quite the 30 that we're looking for in every trade, but not bad. But again, you got the big one on the downside. So again, European Open. This was a bit early, about 8 o'clock this morning. More for news. All right. So right now, kind of, again, I'd like it to go higher. I'm sorry. I'd like it to continue to go down. I'd like to get long this for news tonight, and then reverse it and take a short going into tomorrow morning. And right now, I highly doubt they're doing a 1% tomorrow for FOMC. I almost kind of want to get short the dollar for the news release, right? Because everybody's been telling us it's 0.75. So it is so baked into the market right now. If it comes in 0.75, people that don't look at that kind of baking it into the market thing are all going to go long. So it's like kind of like an easy short to take against them because, again, they're all going long because they're like, oh, we just raised interest rates 0.75. That's it. Dollar strength. Go. But the market is already kind of headed, as you guys know. So there's that. Aussie yen. Here was the trade from yesterday. We talked about kind of, and again, 10:30 was the bottom. We were sitting there saying we're so close, and we hit it. It did actually come back up at 1 and hit it again and went to full profit target. And then hit it again and came back up. And then again, the Europeans opened it up in that same level again and drove it straight down again. So, there's 1, there's 2, there's 3, whether you got in here or here. Okay? Now, I'd say on this one, also kind of looking for the Aussie weakness. One of the ways we could have played this and said, hey, wait a second. Right in here, there's a level of basing, and we hit it again and based. Kind of almost looking for that like little Harry Potter trade, right? And again, if we wanted to take it off of more near term, it kind of looks like that. Now, it did get very, very choppy here with the U.S. kind of market open. I wouldn't say that this is the ideal kind of like, ooh, Harry Potter. But I will say, I do like this whole area right here. I think this is a decent area, right? Again, a little bit of a hiccup in the middle, but for the most part, it just continued to push. And that was a European session-based move. So, does this one turn and roll back to the downside? I'd say probably. And, again, we've had this area marked off here, the 94.05, right? Coordinates, boom, right there, right? So, kind of looks the same. Aussie dollar down. Aussie yen down to the same place. If we can get down to that level at 94.05 before the news tonight, I think that's a good long opportunity. It is 62 pips. Can it move that far? Yes. Is it a slam dunk that we're going to get that far? No. But it's a decent run. It's a decent runner. So we got some room there. All right. Euro dollar. So euro dollar. I hate when it does this. I'm just going to say it right now. Hate when it does this, but there's your European Open at 3 o'clock, and there was a zone right here. And I'm happy to report it missed. Yeah, it missed. By 0.9. So less than 1 pip. Again, we're already talking high. We knew we had levels there. We were kind of looking for the clean level up at 102.61. But again, sellers here, sellers here. I guess you could have kind of reestablished this and said, oh, wait a second. There's a nice push right? There's a long extended candle. Look at that. That's good. I'm waiting for a retest. And then could you have taken it there? Sure, you could have. Right, you could have. Um, I think this kind of confirmation here is a little bit better of an entry. And again, if you hit it, you're probably out. It has pushed all the way down, and funny enough, look at this. It got front run, and then fought it again, and then fought it again, and then finally fought it, and is kind of bouncing through the top side. So again, because we were looking from a short from up top, we actually talked about potential Harry Potter. Pushing deep into the 61.8 level. Look at that. It hiccuped there, but just sliced all the way through to the far side. So it missed it by a little, and again, it had already been down there once. I think if we adjust this slightly at this point, bring this down to like here. You take this off now. What did I just delete? Oh, that's fine. That trade is out. We don't need that anymore. Let's take this off. Let's remove some of these. These profit targets are all tagged now to the downside. Boom. Let's run this the other direction. We're going to do it from there. Look at that. You can see the 23s. The 23ers are in there. I know. Ernest, they don't sleep. They're ridiculous. Like I said, 0.9 pips on the confirmation. Yeah. We're not going to talk about that one. But like I said, I didn't have this one marked off. Right? I may have had this one marked off. And I may have missed the trade. And I may have woken up and saw the price and be like, yeah, it's a good morning. And then looked over and it's like, why? Wait, what? What? And then looked at that and been like, and grumbled some not so nice words that I guess technically you can say, but then, I don't know. Then the channel will be flagged as not, child friendly. Although I don't know that I could be considered child friendly anyway. I do like kids. I am great with kids. But child friendly? Yeah, I don't know about that. But yes, it was one of those mornings where I was like, yeah, baby. And then it was like, what? So, yeah. Anyway, interesting spot we're in now again. Push the zone deep, push the zone deep, push the zone deep. And there's a little bit of a racetrack here. And this was an old 50. Like I said, it's a 61.8 now. So let's shrink this a little bit. Let's go down. Let's look at there. Yeah, I think that's good. All right, so, yeah, we kind of do have to mark that little one. I don't know if there's enough room in this one. Let's see. I feel like the answer is going to be no. Nope. It's close, though. It's close. Look at that. It's really, really close. And that happens to be, here, I'll extend this across so you guys can see it. Right at the 61.8. So, oof, it's a little bit of extra heat in there. A little bit of heat, right? There's going to be some profit taking coming in right about there. But we're so close. Let's go down to 4. We're so close to that 61.8. I feel like if there's a decent little setup there, again, it is dollar strength, which I'm kind of more on the side on. I think that could be a trade that you guys get into. So again, obviously missed the top. Yeah, it happens. Happens to all of us. Yeah. Not bitter. Not bitter. Let's see. Put the green right there. And look at that, right down 100, the 007, 24. So yeah, potential trade set up in there. And again, we're at that 23.6. Do we get the next push through? We could potentially. Like I said, 23ers are pretty strong, particularly after a big rally down. They're like, yeah, wait for the pullback. I mean, they're all over that. So, yep. Euro pound. So, Euro pound. You can see whatever happened this morning, they were not happy about it. There's the European market. And again, we talked about this level here, and we hit it, and we hit it again, and we hit it again, and we hit it again, and we spiked up again. So again, 1, 2, 3, and then finally it broke on 4, right? So again, this is why we talk about this. One, I mean, I guess technically, wait a second, hold on. Technically, there's 1, there's 2, and again, that's ignoring the front run. There's your 3. Right, and it didn't leave, and then there's your 4. So again, this is why we be very, very cautious. But would you have taken a loss on this trade? Nope. I mean, it came all the way up. It had rallied 14 pips up, so no loss on that one, right? and then slice through. Now, we did have a level down at the 78.6. As you can see, that's kind of where it was flirting with right now. Kind of hit it and it's bouncing through. It's going lower. Why do we have that there? Oh, that was an old Harry Potter trade. I was like, wait, why do we have that? We can pull that off now. That was already expired. We are at the 78.6, so I don't care about this anymore. All right, but I'm kind of curious. That anymore? Look at that. That's what we're bouncing off of right now. Do I have enough room to the downside before I push new lows there? The answer is yes. It's right there. Ooh. That could be a nice little interesting Harry Potter trade. And interesting enough, if we do bounce off of it, I'm okay with it. It just shows me that it's a trade for later on. For some reason, if we do start to retrace back up again, I don't need this level anymore. It's been hit. If we pull back up again, look at the 23.6 sitting right there. I don't need this anymore either. Yeah, it's interesting. That'd be the old level here. Again, 1, 2, 3. And what's interesting about that is, look at this. If I bring this across, if it decides to Harry Potter through that level, come back up and start the base in there and punch through, all it's going to do is push right back to the 85. Look at that. There's enough room to get a 1 to 3 in there for the 85. Kind of interesting. So, yeah, I'd say right now, what color is it? I'd say there's a potential for a Harry Potter trade here. And again, this is basically just the pound continuing to implode, is what this is. But if this is going to take a bottom, there are buyers here in the past. It could turn and roll and, again, drive all the way back up to that 23.6, which, again, was a violated level, which, again, is kind of an extended, not the best quality Harry Potter type trade. But, yeah, there's something in there. Euro yen. So, euro yen. We continue to push down. I guess we could go here. Oops, not that one. I wanted this one. I think we talked about this yesterday. What's interesting about that is we bring this down. 23 I don't care about, but this 50 happens to be at an old level. Let's remove it right now. All right, so obviously yesterday, I think we talked about this two mornings ago. Had a lot of basing sideways. Now, this is one of those other ones. Again, it is the euro. The euro was just out there to piss everybody off this morning. I mean, typically that's how we're going to mark the trade. If you wanted to mark the entire top because of the test here, you still would have missed it by just a little tiny bit, you know? So, kind of there. We're going to mark it. Again, you could say arguably one there, but really 1, 2, 3, 4 is what broke. It based in, went down. And now we're at the 78.6. So you can see we have bounced off of it a little bit. So interesting level. We talked about this one yesterday. It's the 138.11. I am not a big fan of the 78.6. I know that there's some people out there like, oh, it did 78.6 too. It's like, man, it's such a big retracement. It's gone like 3/4 of the way through. Like, I'd much rather jump on the new trend and take it all the way back down for a full retracement than be like, oh wait, there's 20% left. I can get it, right? I don't know. It's just not for me. But there is a zone there. It is an old violated zone that was a top, and then sliced through and then became a bottom. So it is an area that's going to provide some momentum in it. I don't know. With all the natural gas stuff, I feel like the euro is obviously going to be weak. Do I want to take a long off of it? I don't know. And then, talking about the level, saying, well, wait a second, if you want to take it long, just wait for it to break. That's an option too. We could take it that way. Looking below where that level is, again, here's the old level, here's the new level. There's a little bit of a hiccup about halfway down. It's about 50 pips though. I mean, breaking through this 138 or 137.95, the hiccup comes in at about 56. So it is about 45 pips down, which is, a decent runner, right? But I do think after such a huge push, and again, this push here, this is oops, nope, not that one. Nope, not that one. All right, here we go. There's 3 o'clock. And again, this is the euro today. This just piss everybody off. We're going to get close to entry on almost everything right at the open, and then just leave you guys hanging there, and do a huge push, right? I mean, the European move to now is 170-something pips. So, yeah, kind of like, give you the right finger, right? Look at the Harry Potter off that zone, too. And again, 1, 2, 3. This is hit number 4. We based in there. We pulled back. It's just there's not enough room for a continued short. So, a little more challenging on this one. I would say look for a reversal. I don't necessarily love this one. Again, I'm not a big 78.6. I'm sure there'll be people out there that can quote all the statistics in the world about how great the 78.6 is, but it's just not for me. I like the demand zone above it, and again, trade what you see the most. But again, there is the 138.11. It is a demand zone. It is a 78.6. It is a previously violated zone, so we know there's somebody there. I think for me, again, going for a second or third hit down here at 137.14 is the bigger one. Again, this is outside of a daily ATR since the European Open. I would expect somewhat of a retracement, so I mean that is a positive for it. But again, it's totally up to you guys, right? And again, that's what happens when you get 4 hits, and look at that: 4 hits, a base, and a Harry Potter in the same level. It just doesn't have enough room to take it to the top side. Pound. So look at this sucker, right? So pound. We were sitting. Let's see. Yesterday at this time, we were sitting right here. And we talked about an entry at 9:30, and it was out by 10:30 by the time we got off. So, yeah, actually, I guess at 9:30, 9:30 was the red candle. So we had mentioned this yesterday. We talked about it being in and being not a bad trade. It is fully out now. It was about a 35 to, you could have got 40 something out of it. It kind of turned where it was supposed to, right? Again, we knew we had something kind of sitting right there. It had already been tested. And again, you can see it hit here, hit here, hit here. Kind of flirted with it here, and then kind of came up. And what did it do on the side? It came back up, it grabbed it, and then continued to push lower. Now, this one, it had some issues with the 50, and some people may have gotten faked out there. I would say that really this is probably the better of the levels. And again, that was a better bounce off of it. The 50 was there, but it was kind of not the best candle to really draw with, right? And then when it came down at base a little bit early, the 61.8. So again, the 61.8 you could have taken at 8 o'clock this morning. Nice rally back up again, and again, looking for a profit target. The old zone would have been perfect to take from there. So I like this one. I think this one, again, pound data, not necessarily the best right now. I think the dollar rolls back in. I think people are going to start looking at that 0.75. People are going to start talking about that 0.75 and realizing how big of a jump. I mean, we're about even with the pound as far as interest rates go, because they've done a lot more than us, right? 0.25, 0.25, 0.25, 0.25, 0.5, right? We've done the 0.75 big jump, so this one is going to be a substantial jump for us to get ahead. I think it gets factored in, and really, I think downside targets. We mentioned this before. The 118.77 is still kind of where we should be going. So, yeah, I'd say again, I'm more bearish focused on this one. Again, there's a bunch of different trade setups on this one. The 3 o'clock candle was here, right? It had already started to take off from late last night. So again, bearish. Again, nice turn on the 61.8, but again, 1, 2, 3. I guess you could count that one if you really wanted to. It's a little bit early, but again, that's why, I would say that after this big push down, you were looking for some type of profit taking. That's exactly what this is. So, but not surprised that it turned on this little kind of Harry Potter level. So, pound yen. Pound yen looks very similar. Again, also, I'm going to mark this one off right here. Yeah, there's a European Open. This one missed that zone by 4.3, which again, pound yen moves more. Not surprised. Not as close, not as frustrating as the euro, but kind of the same move. And we talked about get your profit taking again. It had front run, kind of based, and that's where it kind of hiccup and then tried to come back up again. I still think the next big zone, and again, this is not really. I mean, there's 1, there's 2, there's 3. I think the next zone we're looking at is down here, but this is not necessarily. This is not like an automatic. What am I trying to do here? This is not an automatic go long. it's pushed this zone pretty deep. It did do a bit of a retest over here for European session, but the trade's already done at this point. It's already happened. So, could you get into it one more time? Maybe, if we're going to have some kind of channeling sideways. But overall, I just feel that I feel like this zone is pretty much used up at this point. Again, I know that it was kind of reestablished again here, but again, it's hit that area like 3 times. I just feel like this one is kind of at the end of its road. So I don't want to be like, yep, love the level, because I don't necessarily love it anymore. I think we need to push back down lower, and I think the levels down here at 161, I think these are better levels that we should be looking at. And in reality, I guess we've pushed it almost to the 78. Let's take this one off. Let's start running it from the top now. There we go. Look at that from the bottom. Again, nice little trade. I think we talked about that yesterday. Yeah. So again, 165.00, big psychological level, and that's again what we saw yesterday at the beginning of chart school, and almost again today, and it went without us. Dollar CAD. So dollar CAD had a choppy little entry in this one. This one really took off again. European session. It did not go all the way top and actually peeked its head out of the bottom. So had you been taking this as a European session based trade, again, was really, really slow. It was kind of like, hey, listen, we need some type of a confirmation. And this was a rough one. You got to hate this. It actually kind of went down a little bit lower, but it hit it. It's like, man, it's hit this area 3 times. Are you going to go? And then it finally took off, and it moved about 50 pips higher. Did not get to its 1 to 3 yet. It's really, really close. I would say dollar CAD wise, we are getting a little bit of strength with oil, but not that much. I thought there was some CAD news tomorrow. Is it today? Hold on. Non-CAD. Nope, I thought there was. My bad. Not bad. I thought we had some CAD news coming in. Anyway, I would say, yeah, dollar CAD, I'm bullish. Again, we are at the very, very bottom of the curve. We knew that before. Oh, sorry. I thought that was an important message. I was like, what? I was like, who that? Who that? It's not important. Sorry. Yeah, I would say right now, again, bullish, at least back up until, we'll take this, probably up in here, 129.37. I don't know if I'm going to automatically take the long. I'm sorry, automatically take the short. Again, it's hit it. It's kind of reestablished itself a little bit. I'd like to see where we are. Now, if we push all the way up to there for FOMC and we hold, and we're there before FOMC, I think that that's a short. And the rationale why I think that would be a short is because, again, for all the retail traders out there in the world that are not thinking about how the market bakes things in ahead of time, they see that 0.75 and everybody and their brother is trying to go long, right? Well, when everybody's trying to go long, the market tends to go the opposite way, right? So, excuse me. I think that could be a good shorting area for tomorrow. Let's see. That is right there. And again, that would be a quick push back down. It's not going to be one of these. It's going to be like this. If we're up there. So, and again, we'll talk between now and tomorrow. We'll see where we're at. But I think, again, it could be this level. We could grind our way all the way up. It's 115. We could do that in 2 days. But we'll see how much gets sucked in. But yes, looking to get short the dollar CAD for FOMC. All right, dollar Swiss. All right, so dollar Swiss. Talked about this level. Again, we talked about the aggressive entry or the 23.6. There's your 23.6. It tagged this morning at about 5:30. Again, 5:30 reversal. right there. You're almost out. It's a little bit late right now. But again, you guys were here yesterday. This one, again, we talked about one hit. Actually, let's see. We were sitting here yesterday. There's your 1030. So again, we talked about it being up in your 1030. I don't know. Did yesterday's hit work? It did. I missed this one. There you go. You can see your 1 to 3. And again, 1, 2, 3. Would you have taken it again? Not really. 4 is what blew it out. There was the actual zone that the confirmation that zone came from, and the 23.6, and bam, there's your trade. Little 45 pipper. It's almost out. You're almost done. So again, you can't get into it now. But again, if you were attending yesterday, you knew about these two levels. And again, the 10:30 reversal time. Like I said, between opening, I mean, I don't know, maybe I got to rename it. I don't know. Could you do it in 30 minutes? I guess you could. Right? 4 times a day. Although 30 minutes would be hard. I don't know. I feel like this is more of like the 60-minute trader, right? 15 minutes at the open, 15 minutes at 5:30, 15 minutes at 9:30, and then 15 minutes at 10:30. It could be a thing. It could be a thing, right? But yeah, so I mean, you would have grabbed this 10:30 yesterday, right there, and then 5:30 is right here, and that's the trade we're about to get out of now. So there you go. Thank you on this one too. I think it does have a little bit of a problem down here. Again, it showed that it has some problems. Again, I don't think the Swiss is in a great place, but again, I think a lot of this is going to be positioning for tomorrow. So it's funny. You see the euro going straight down. Massive dollar strength. Yeah, this one, the dollar's in a different place, and it's not massive, but it's moving to the downside. All right, dollar yen. So, dollar yen. The saga of the dollar yen is still there. It has not gotten taken out yet. It's still going. It's still fighting the 50. Although at this point we've run along the 50 here. We've hit it here. We've hit it here again. There's one of those trades where it's just your level of frustration. It's moved 0.05 in 24 hours. It's 3 pips. 3 pips in 24 hours. At its peak. The downside, you were up about 40 pips, and I think I mentioned this yesterday. If you're taking, for me, 30, 35, you guys know my opinion. I've said it before. If you have the classes, you guys know what I'm talking about as well. For me, by the time you get to 30, 35, we see a lot of pairs retrace back again. That's why I love to shoot, at least in spot currencies, for around 10 pips worth of risk, 10 to 12. I just find that at that 35-ish mark, you tend to reverse. This one made it a little bit more. Again, this one made it to 42, and then reversed, and then came back up again, and then came down 42, and then reversed again. It's just one of those things with this market where people are like, I don't know what the heck we're doing. We go into a recession, we're raising interest rates. Is retail sales numbers good? Is the president rewriting the definition of recession? It's kind of like, what are we doing, right? One of those things. Anything more than 35 for kind of a day trader for me. What the heck is this? I think it's always a little interesting. All right. So there we go. Let's go across and look at the commodities. So, talked about a little front run. So, yesterday afternoon, we kind of banked right off that 50%, right? And then late last night, obviously, there was some news about pipelines, everything else being cut off. We shot through it, and we're messing with the 61.8. So, again, 61.8 had been touched. We can remove both of these right now, although it's funny, it's now flirting with the same thing. We were able to get up and actually touch. We mentioned this yesterday. Again, I didn't like the 78.6, but this is a very, very hard push. It's really, really hard to kind of not talk about that one. If you guys were up, again, it's kind of 5:30 is just one pass it on the green. Again, here's what kind of an oil trade looks like on this one. Right there. Okay. Sorry, that's 2.97. I don't know. Can I make it right at 3? Actually, I guess I got to adjust this too. There's your 3. So it got within like less than 10 cents. But that would have been your trade setup again from that 98.90 level. again, it's kind of the basing up top. It's a 78.6-ish range. It didn't get to the 78.6, so not my most favorite of levels. But, because it did come up there, we can remove this now, and we can look to see. And again, bit of a racetrack here, but let's pull this. Let's go here. Look at that. The 50 just happens to be where the start of this whole thing happened. So, you guys know how that works. Again, in the short, there's your downside target. We'll put it right there. We'll change it to that. 96.19. So I would say it kind of makes sense. Again, the global recession fears, that kind of stuff makes sense. Russia kind of messing this up for us is still not helping, but is what it is. Trade's already a little bit deep, a little bit too late for us to do much with it now. So, but you guys get the point. All right, natural gas. So, any shock that this is higher? Nope. Nope. And again, we talked about this yesterday. I talked about the 3 potential scenarios, and we saw the pullback. We saw it pull back, right? We saw it burst through. We're like, here we go. It did pull back. It just didn't pull back enough, and then just took off to the races and went crazy. And again, this is a geopolitical thing. Taking pipelines off, and we're doing this. So, yeah. So, with that said, obviously this zone is off now. We can remove it. We were looking at this level all the way up top. Let's see. Let's pull some of these levels off now. Actually, did we pull right in there? Oh, no. Yeah. This is gone. This is gone. Pull that off. Pull that off. Pull that off. These are some of the old levels that we had in here. We don't need them anymore. Pull that. Both these profit targets are cranked. All right. Yeah, I mean, 9.9. Yeah, I mean, that's the next target. So, all right. I mean, maybe there's some guys sitting right here. Again, it is a 23. It's right below this. There's a little bit of it's a pop. You guys can see a slow run up right around lunchtime, and then a pop again. It didn't retest it, though. I would say if you're trading this kind of parabolic retracement move, and again, good luck trying to time the top on that one. That was literally straight up, and then we're kind of pushing back down again. Again, 870 is where the target would be to the downside. Yeah, 8.7 would be where we're on the downside. We got a bit of room to run for this one, but I'd be extremely cautious. Like, this is literally the playground right now for the geopolitical event with Nord pipelines and what turbine is going offline, and what are we going to do with this? And yeah. So take it for what it's worth. Again, I'd remain a little bit bearish, but if this thing all of a sudden starts just to go bing and pop and go crazy, my surprise level would be 0. So caution. Now, gold. Again, gold is finished. Yesterday we talked about it. From where we were yesterday morning, right here, we're at the exact same spot, right? So we were at, let's see, 10 o'clock, 10:30. We're right here. So we are almost in the exact same. Actually, I guess 10:30 is the next candle that opens. Yeah. So we are like not even $1 higher. So we're literally right on there. Right? It's just chopping back and forth. I'm kind of happy that this kind of rolled off this 17. Again, this was the short area. We knew that there was some buyers in here. Love that it touched and went higher again. Every time it hits this level, it's going to eat more buyers out of here. Right? I kind of like this one. Right? I don't think this one is horrible. Let's see. Is there going to be a small group coming in? Probably. Yeah, it's probably why we got something going on here. I think this level, tomorrow will be a level to watch, right about here. And let's just change it into yellow and black just so you guys can see it. There's an area of basing there. People that took the most recent high to kind of where the most recent push was, right? Right, the most recent high to the most recent low, right? 1726. Okay, that actually may be an area that we go off of before tomorrow. I wouldn't be surprised if we run up in the afternoon and maybe push back down, just kind of doing one of these like the waves, right? The up and down, up and down, up and down. I think gold should be pretty interesting to play tomorrow. Obviously, the 0.75 is a bold statement. If they talk about, any language about, inflation is already under control, or, I think really, again, the statement and the questions is what's going to matter. Hearing what kind of the next little bit is, I think, really kind of what we're going to see the most. So, there's a lot that can happen with this one. Take it for what it's worth. But I think 1726 could be a short area. Still, again, we've already kind of hit the profit target here, but I think if we get a break of 1708, I think this one goes down. But again, very news-based position. Silver, look at the chop in this one, right? Ding, 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 ding. Purely going sideways. And there's really not much you can do with this one. Europeans pushed down, came back to buyers, came back up, getting squished in. So kind of consolidating. If you wanted to draw something, you could say, listen, there's our tops, and you could say that, there's our bottoms. So consolidating in FOMC in one day. Just be cautious with silver. I think if this one goes higher today, then we look to take it short tomorrow. And again, fundamentally, people are going to be looking at interest rates thinking, oh, this is a currency trade. Well, yeah. The more they raise it, the more they're trying to crush inflation down. And again, particularly making a comment about how we will continue to manage inflation and our goal is going to do, that's what's going to tell the story. Okay. All right, let's look at the opening. So VIX is higher. And again, FOMC is in a day. Russia's like, oh, the pipeline broke again. The pipeline broke again, right? So, it's there. Dollar, nice pop up today because remember, the geniuses over here just said the dollar's retreating, right? Where is it? A tactical dollar sell-off needs a clear shift to accommodate more, right? Tactical, right? And then it's done nothing but pop up. And again, I think this is in preparation for tomorrow. Even more reason why I think we go short tomorrow at the news. Unless they make an extremely hawkish comment about we're doing 0.75 next time too, guys. And then gold will get smoked. But I kind of like all this pre-positioning. All right, I kind of like all this pre-positioning. All right, let's see what we could have traded at the open today. Let's go down to the opening print. Okay, so yesterday we talked about this. Looks like this one tagged it right around 2 o'clock, right? I guess about 3 o'clock. But we talked about that level coming down to 39.74. And again, nice little bounce off that level. Looks like we came down and we hit it. So we'll remove it. Let's see. Did we have anything at the open? Where's our 9:30 candle? So our 9:30 candle is here. I would say not so much. Look at all the spacing. No really pre-movement market movement. So really since yesterday, here's where we we reopened, right? And then just kind of went sideways. Pushed down a little bit and kind of came back up again. Maybe you guys could have traded something at the 8:30 window if you're looking at it, saying, listen, I'm trying to get into something. There was a gap here. I know this is an area of imbalance. And again, when we came back up, it missed it by just a little tiny bit. And again, I would say that was your best opportunity this morning. But, was it perfect? Not really. Oh, here you go, 95.7. So yeah. So remember we said that, it could be all the way down to 95. Well, is it 95.7? So I didn't say the 0.7, but I was thinking like 95 and a half. Or I said 95.3. So I missed it by a little bit. But yeah, not actually surprised with that confidence number. I don't think many people were either. So, but anyway, showing that consumer confidence is down, obviously it's, more of a short scenario. So, but unfortunately, no opening print setup. And again, it's not going to happen every single day. It's a strategy that works for, under specific situations. And that's why it's a rule-based system. I always love when I get those questions. How many setups am I going to get a week? I don't know. I don't have a crystal ball. Can't tell you. If you're looking for any type of guarantees that I'm going to get 12 setups a week, this is not the strategy for you, right? But when there is the setup, it works great. And this is not one of those times. This is sideways momentum, right? And again, if you really wanted to get into something early, but look at this. No trending, a quick spike. And then again, 9:30 sitting right here. Not every day is the perfect day. So this is not it either. There would have been no trade set up here, unfortunately. Again, it's going down, makes complete sense. And again, it's kind of the same thing, right? So seeing consumer confidence, a high impact news release 30 minutes after news, it's always kind of like, what's it going to do? What's it going to do, guys? And, if anything, I guess, what was it, 10 o'clock? Yeah, it was 10 o'clock. Yeah, it's just impulse correction. Even here, it's just back and forth, back and forth, back and forth. So, yeah, just not a great one. Let's see if NQ had anything better. NQ's 930 is here. Again, not really. It was already basing at a level. So, I would have said short. I would have said short based off the basing, but it didn't give us really a clear pullback to anything. Maybe, I guess the 915 did push us up. I guess there could have been a case made for that level there. So, if anything, yeah, there could have been a case made for this, right? Here's your 9 o'clock. It pushed down, then at 9:15 it went up, it went up, and went up, and pulled back into this level of basing here. There could have been a case made for this one. I'd say that, again, you got to be a little bit higher on the aggression scale to get it. Taking it short, I don't think is bad. That it would have been my assessment at that time in the morning as well. I would have been in total agreement with that one. So if you did catch it, awesome job, A+ for you today. NQ is the weakest as it has been. And again, using that kind of like on a news position, again, it did the same thing here, where at 9:45, 15 minutes before, what did it do? It went up, it went up, it went up, it went up for news to come out, and then it came back down again. So it did the same thing. You had to be a little bit more aggressive on it, but it would have been a good short for today had you gotten it. But as far as opening print goes, yeah, there could be a case made that this one would have qualified. So you could say we're 1 for 2. YM, oof, definitely no. I'm going to tell you right now, definitely no. Look at this chop back and forth. There's no zones, nothing even remotely close until really much higher up. And again, even down here, and both these levels are junk. Look at this: 1, 2, 3, 4, 5. It's 6, and then kind of look at this. This is ugly. Yeah, so absolutely no trade set up there. Even at 10 o'clock, look at this. Doot, doot. Same thought. So yeah, again, that is a no trade. And again, it could be because FOMC is tomorrow, and they're like, wait, you're going to do what? 0.75? What? 0.75? Are you insane? What are you talking about? Right? But yeah. Russell, let's see. Did Russell have anything? Well, Russell actually, there could be a case made here. Kind of this level right here. Right? A little bit of a gap. Touch, basing, and then confirmation right here. And then there's your 930. So, I would say that, yeah, of all of them, again, Russell's been kind of the crappy one lately, but Russell or even at 950 for news, 1 to 3 is only right there. Right? So yeah, so there could be a case made for NQ, right? NQ, there absolutely could have been a case made for this one, right? The pullback here on the 5-minute. YM, absolutely not. There's just nothing in that one. And then Russell, there could be a case made absolutely here, and you guys can see where is it bouncing off of? The 1800 again. We were talking about, coming down, and again, nice little gap in there, and then kind of a pullback in that gap. So it was already an area you should have been looking for selling at 845, and then again, 905 it touched, and again, do you want to take it? You want to play with that fire? Maybe, maybe not. And then again, the 930 open, and then again, the 950 kind of spiked back and forth into that level. So there's some opportunity there. Yeah, is not the worst of trades. So 2 out of 4 you could have traded at the open today. And again, you needed to confirm both of them on the 5-minute, but they both had the correct setups in there. Again, finding basing levels, basing below, pulling back up right before the open, and crashing. So not horrible. Looks like again, these guys are getting beat. Let's go back up to 30-minute. Apple accelerating lower. Twitter, yeah, Twitter's got a little bit of a holding firm, but man, after that, it's down to like $37. And Tesla coming back again. Again, a little bit of a level right here. But if it breaks that, looks like we're back down to the 750s. So Yeah, fun, excitement. So, all right, let's go ahead and do the drawing. So, Ernest did win yesterday. All right, Ernest did win, even though everybody used their hacks, and it didn't work. Right. It is for 25. Again, we don't need to do 50s because it is not. Oops, sorry, my phone was going off again. Let's go ahead and close it down and do the winner of today's drawing. No names, no names, no names. Yeah, no, that's pretty much what we have to roll to. All right, winner of today's drawing is Debbie. Wow, Debbie just gave it right back to Ernest. Ernest stopped her streak, and then Debbie's like, I'm going to stop your streak. Take that. Debbie's been winning. Debbie, you've been winning a couple, you've been doing like, last 2 weeks have been good for you. 1 to 2 a week. Look at that. I didn't even say anybody's name this time. I cannot be blamed, right? I cannot be blamed. It's nothing to do with me this time, right? Wasn't me. Not getting blamed. So, all right. With that said, thank you guys for joining. Oh, and I do have some bad news. Yeah, I got some bad news. So, there will not be chart school tomorrow, Thursday, or Friday. You guys have the rest of the week off. And the reason why is we have lax camp tomorrow. I have camp from 9 to 12. So, I forgot that it was for, yesterday. I didn't even think it completely with everything with tryouts and 2 teams and this organization, that organization. I totally forgot that we had camp this week. I will be coaching at camp Wednesday, Thursday, Friday. So this, unfortunately, will be the last one of the week. So it does mean that we will jack the pip chips up next week to make up for the missed pip chips this week. But for the most part, it will be vacation for the rest of the week. So with that said, have a great rest of the trading week. If you have anything, again, if I can't be around, I always love when you guys are active in chat, posting trades in there and things that you guys see or different opportunities, even if it's just the level, right? Again, use the different channels in there. We have one if you see a position in Nadex that looks even interesting, that it's like, hey, listen, guys, this is kind of at like a 61.8 and it's kind of at the top side. Throw it out there, right? That's why the forum is out there. So it's always great when you guys are posting things. And again, it doesn't just have to be profitable trades, guys. It could be losing trades. It could be trade setups. It could be any type of analysis. Again, the forum is there for you and for you guys to learn from each other. So again, when I can't be there, I try to post things when I see them. When I'm sitting here. Again, not distracted with 3 different kids. So again, stay active on the forums. With that said, I'm out of here. I will catch you guys next Monday. And again, hopefully I have, again, plenty of time. The goal is that if I have camp from 9 to 12, and then I have the rest of the afternoon, because Kip and Jen are definitely not back, it's just the boys, the goal is to hopefully get those classes finished. So, we'll see. Anyway, hey, could I ask about a specific company? Sure, if you want to, yeah, let's do it real quick, if you're still there. Cairo, go ahead, type it in chat, and I'll see it, and then I'll look at it real fast for you. What is the company symbol? 23andMe. Is it ME? Right here, 23andMe holding. Ooh, penny stock. Yeah, so typically, this is where I always like to warn people. And again, take this with a grain of salt. I can look at it on a technical analysis basis. I can do the analysis and show you if an institution or a bank was looking at this, what would they be looking at, where traders going to be looking at it. Understand, a lot of the trading that I do is based off of what institutions, banks, large money is doing, right? Because the markets are absolutely manipulated. When you have something under $5, financial advisors, banks, institutions are not allowed to hold these in clients' accounts because they are considered too risky, they are too small, and they are too easily manipulated. So the analysis I'm going to give you on this one is going to be based off of like this was a stock over like 10, 15 bucks. Just keep that in mind. So I'll start off with the analysis on kind of more of a 4-hour basis to kind of see where it's at. Again, looking at its range right now, you can see that it's definitely kind of getting beat up here. I mean, it's definitely on the lower end of the curve. And typically what we look at when things are low on the curve is for buying opportunities. Something like this that has not been around for a long time, and again, things are starting to get beat up. Obviously, on fundamental basis, there's more competition out there. I'm going to look at this and say, okay, it's very, very low in the curve. It looks like its mystique is gone, right? If I had to pick a trend on this one, I'm going to say it's sideways, but for the most part, it's pretty much down, right? So we need some type of a pop before we want to short it anymore. I would say it's probably closer. I mean, really, where's it going to go much lower, right? It's going to go down to 250. Is it going to go out of business? Probably not anytime remotely soon. There's probably more reasons why it could go up than go down. Looking at it on kind of an intraday basis, dropping it into like a 30. I'm going to look for big areas and where price is going to move, right? So I'm always going to start with current prices and go left. Right now, immediately looking left, the dotted line, you can see that there is a level sitting right here. Okay, and it is a level that, again, is confirmed, but got front run, was touched again, was touched and pushed very, very deeply. Closed down there, and again, if it was the opening print that low, could it have gone lower? Sure. Got a little bit of a hiccup, got to push through again. So I would say right now, if anything, I would be kind of short this position, and looking at the next level would be kind of probably down here, because again, you can see it had a very strong push that way. And looking at the distance between these two zones, I would say, hey, listen, again, the Harry Potter trade is kind of more of a confirmation based trade. Let's see if I can actually get it on there. It was like jumping over. It was like, no. It's funny. It's see how it jumps over because it's a cheap stock. I can't actually block it off because it's like a half a penny, and there's no half pennies here. But anyway, I'll mark it there, and we'll talk about if there's enough room to run. I'd say right there, that's approximately, and again, it's a little bit bigger because, again, I have to use pennies. It is a little bit it's right. The next area of buyers that are coming in, and again, it's not a crystal ball, but I can tell you right now, I know there are buyers sitting down here at $2.50. Why? Because the price stopped at 251. Actually, it did go a little bit. Yeah, at 251, it didn't quite hit 250. The price didn't go any lower. If there's nobody willing to buy it here, the price would have continued to go lower. Now, could there be one person left? Could there be two people left? Sure, absolutely. Could be, right? I just don't know that answer. But I do know that there was people there in the past. So instead of just guessing, saying there's buyers right here just because, right? I know there's at least buyers sitting down here, and there's at least one buyer left that's sitting right there. Okay? And again, if there wasn't, the price would not have stopped there, right? The price would have just kept going because there would have been nobody willing to buy it. So I know that we got a little bit of room to run on that one. I do know that, again, my typically profit targets for me would be sitting right here at the candle behind. And again, that happens to be just a little bit deep, right? But again, sucking back down, people are going to be looking at $2.50. $2.50 is more of a psychological level than 257. So I'd say if we get a little bit of basing right here, I would be more of a short in this one. But understand, a lot of what I'm talking about, again, is based off of large banks, institutions, hedge funds, large money manipulating the market and taking advantage of retail traders. There are unfortunately none of those traders over in this arena because they are legally not allowed to trade them because they are under $5 because they're considered penny stocks. But again, if this was a $55 stock, this is exactly how I would do the analysis on it. And again, throwing other tools in there, you could say, hey, listen, obviously this one is kind of channeling down, right? We have lower highs, lower lows. I mean, as far as channels go, it is also saying that it is more of a short. As far as pullbacks and things go, I mean, here's the most recent, I'd say the most recent low to the high. We just broke through the 50, so anybody that's trying to trade this with fibs is looking at this and being like, uh-oh, it broke, never mind, get us out. The 60-8 would be the next level where some of those guys would attempt to come in, and there's nothing sitting there. And then the 78 would be the next level. Guess what? That takes us to a full profit target on that one. Geez, if you wanted to do, let's see. It's probably this one. Oh, it's doing different things here. Let's go down to a 5-minute. Yeah, even here, looking at like moving average crosses, I was looking for the actual cross, but it's going to be weird and do a strategy. I just want an indicator. Just give me the indicator. Whoops, not that one. I don't need to do strategy tester. Get that one out. Just give me basic moving averages, just technicals. Whoops. It's going to be a pain. I just want moving averages. There we go. All right. And you could do like the inputs. We'll do 9. We'll do 14. And we'll change that one to red. right? So people are going to be looking at this one already. And again, we're on a 5-minute. They're going to see the fast line, the blue is already broken through, and they're coming back up again. This starts the base, and you can see it's already chopping here. If it comes down, and again, the red line should catch up. Again, it's an average. As it slows down, the red will get to an average, right? Because the red is the slow line. The next, and it'll probably pull back a little bit. Guess what? The next time it crosses through, that will be a sell for a lot of retail traders. It's also feeding right in, but right now it's basing inside of that zone. So hopefully that helps. Again, I don't mind looking at things like that at the end of the sessions. It always works. And like I said, again, $2 stock, always a little bit different, but those are the common methods a lot of people are going to look and use to analyze it. But as my students joke all the time, I'll say a chart is a chart is a chart. They're all done the same exact way. Something like this, though, again, is a little bit more easily manipulated. You can have an individual can be a market mover here if he makes enough little fat finger buy or so. So just keep that in mind. All right, with that, I'm out of here. I'll catch you guys next Monday. Again, hopefully I have news that we can, the class got recorded and the microphone got here. Be calling them today. I'm like, where's my microphone? Tired of being in here. So with that, I'm out of here. You guys take care, and I'll catch you again. Take care.